Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Alexandra Semenova. Why did I have a brain flash there?
Guys, we have to start with Google parent Alphabet. John just mentioned that a lot of investors are upset about that big CapEx number, but there are a lot of positives in this report. Despite the stock slumping today, the company topped projections for quarterly revenue, specifically for its Google Cloud revenue jumped 48% to a whopping $17.7 billion. That handily beat Wall Street estimates. Gemini, its artificial intelligence model, it is also rapidly reaching new users. And then here's the number that is making traders upset. CapEx will reach as much as $185 billion this year, compared to roughly $120 billion that analysts were expecting. Their expected spending for 2026 altogether will also total more than what the company spent in the prior 3 quarters. But CEO Sundar Pichai is saying that this is necessary, that they're already seeing that spending actually be monetized in their AI endeavors. And then Jefferies analysts also point out that AI is paying off for Google.
I'm old enough to remember when companies actually got rewarded for taking their AI CapEx up.
Yeah, not so much anymore. I loved what one trader said, that this was Alphabet's mic drop CapEx. Because the number is so mammoth. What else are you looking at, Alex?
Yeah, I'm also taking a look at shares of Estee Lauder. Looks like they're down 20% right now. Wow. Really tough day for the company. It boosted its outlook, but it just wasn't enough for investors who were expecting more from its turnaround effort, helmed by their new CEO, Stephanie de la Favre. Sorry if I'm mispronouncing her name. The company narrowly beat Wall Street's expectations for revenue and adjusted earnings per share in its most recent quarter. That was lifted by growth in skincare products, including La Mer and The Ordinary. People were also buying their fragrances from Tom Ford and Le Labo. It also narrowed its outlook range for net revenue growth in the current fiscal quarter ending June. It now forecasts 3% to 5% growth. So solid numbers, just a really high bar, as we're seeing with a lot of companies this earnings season.
John Tucker, you have to invest in your face. I mean, I learned that from Alex Steele.
Let's see. Yeah, who said that?
There's actually
Obviously, I have not invested.
There's a great article. I don't remember who published it, about how because millennials can't afford homes, they're actually investing in skincare products and self-care.
Okay.
Affordable luxuries,
yes,
because homes are not affordable at all.
Okay.
All right, let's move on to another household name.
Yeah, we have to end on a high note. So many negative news today, but some positive news from Hershey. They offered a better than expected 2026 outlook. Just taking a look at the stock right now, shares are up about 7%. They said that higher prices and new products are set to boost performance. The company sees adjusted earnings per share of about $8.20 to $8.52, and sales gaining 4% and 5% in 2026. They have, of course, been impacted by tariffs and higher cocoa costs, but chocolate makers did get a little bit of reprieve when the president said that he will not issue reciprocal tariffs on cocoa. Hershey also said that cost pressure from commodities and tariffs is set to be better this year, so they're going to spend more of that money on advertising.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.